Good evening, strategists. The market just flashed a critical signal. Less than 5 minutes ago, an astonishing 85 million USDC was minted on the Solana blockchain. This isn't just a transaction. This is an institutional earthquake, a black swan event whispering of imminent volatility and strategic repositioning. For those who understand capital flows, this is an urgent call to attention. Your wealth protection hinges on decoding this move. Right now, let's cut through the noise. When 85 million USDC is minted by Circle, it signifies a substantial influx of real-world fiat, primarily US dollars, being converted into a digital stablecoin. This is not arbitrary. It means a colossal entity or a consortium of entities has deposited $85 million with Circle specifically to acquire USDC. Historically, such large-scale stablecoin mints often precede significant market movements, acting as a precursor to either major buying pressure or strategic liquidity provision. Why Solana? Solana's high throughput, low transaction costs, and growing institutional adoption make it an ideal rail for large-scale capital movements. We've seen a consistent trend of institutional interest in Solana, including recent ETF inflows and tokenized bond deals. This 85 million USDC injection is a direct affirmation of Solana's utility as an institutional settlement layer. Now, the critical question: what does this 85 million USDC signal for markets? This capital is dry powder. It typically doesn't sit idle. It's poised for deployment. We are observing two primary institutional intentions. 1. Significant market entry positions. Large investors often convert fiat to stablecoins before executing major purchases of cryptocurrencies like Bitcoin, Ethereum, or, critically, Solana itself. This could trigger a concentrated buying spree, pushing prices upward. 2. Strategic liquidity provision within DeFi protocols on Solana. This can lead to increased total value locked (TVL), improved capital efficiency, and potentially higher yields for participants. Both scenarios, however, point towards increased activity and potential volatility. The flow of this 85 million USDC into specific exchanges or DeFi protocols will be the immediate tell. Watch for a rapid decline in available USDC on exchanges, coupled with a surge in specific asset buy orders. As a head of strategy, my analysis suggests that this 85 million USDC mint is a high conviction signal. It's not just retail demand. This is smart money positioning. The sheer size dictates institutional involvement. This creates a window of opportunity, but also necessitates extreme caution. My strategic outlook: monitor Solana's on-chain metrics, specifically for large transfers of this newly minted USDC to major centralized exchanges or key DeFi protocols. The wallet address of the minting treasury is publicly available, allowing for precise tracking of these funds. We expect to see a surge in buying volume across the Solana ecosystem. While the broader market might consolidate, Solana and its associated projects could decouple and witness a concentrated capital injection. This is not financial advice, but rather an educational observation based on real-time data and predictive analytics. Investors must perform their own due diligence, but ignoring such a clear institutional footprint would be a tactical error. The shift has begun. This 85 million USDC on Solana is a direct reflection of institutional confidence and strategic positioning in an increasingly dynamic market. We are entering a phase where swift, informed action can make all the difference. Stay vigilant, track these flows, and understand the geopolitical and macroeconomic undercurrents that amplify these on-chain signals. This is Rexy, the strategist, keeping you ahead of the curve. Your financial future demands nothing less than real-time intelligence. Don't be late. The window is closing.